Hi there. As you can see, Plug Power had a great performance over the last 5 years. The stock price has more than doubled. But if you have invested at the highest peak when the stock price was over $60, then your return wouldn't have been so great. You'll have a decline over 80%, and this is quite bad. You don't want something like this in your portfolio. However, at the current price, $7.40, the stock price seems undervalued based on the analysts' estimates, the future earnings. Now the market cap is around 4 billion. And as Plug Power has more opportunities, the revenue is expected to grow a lot in the future. And that's why analysts expect higher growth in the future. So in this video you'll find out the future outlook of Plug Power, and at the end its valuation. So let's begin. As you can see, the revenue is expected to grow a lot in the future, from 700 million to over 5 billion by 2027. And their earnings are expected to improve a lot, from a loss of 700 million to a profit over 600 million. So that's amazing. If that happens, then the stock price is quite cheap at the current level, and you can make a big profit. Now, if you look at their latest results, you can see that the revenue has improved from 150 million to over 200 million, 260 million for the second quarter, so that's great. They want to develop the green hydrogen ecosystem, the supply, the delivery, and the storage. Moreover, besides this future growth, there are other opportunities. More countries are investing in hydrogen energy. For instance, the EU aims to produce 10 million tons of renewable hydrogen per year by 2030. The US announced 1 billion funding for hydrogen projects, so that may be a new source for Plug Power. And Japan announced a plan to invest 190 billion in hydrogen over the next decade. So Japan may be a large market for Plug Power if they get some contracts in that country. So everything looks good. The future outlook is bright. Growth ahead and profits, plus more investments in hydrogen energy. So that looks great. Now you also have to look at the risk, not only the upside. Because if you invest in a company without knowing the risk, you can have a result like this: a decline over 80% in your portfolio. And you want to avoid something like this. So let's see the risk. The first thing that I don't like about this company is dilution. As you can see, the number of shares has more than doubled, from 240 million to over 589 million. And that happened in the last 3 years. As they are making no profits, they have only losses, they will need more money to fund their projects, to invest in infrastructure, the green hydrogen ecosystem. And the easiest way to raise more money is from investors. They issue more shares and they get the money to fund their future investments. The problem is investors get burned. It's like you invest at the current level, $7.43, but they keep issuing more shares, and the value of this company decreases over time. And this is not good for investors. So when you see something like this, huge dilution, it's better to avoid the stock. Another risk is the hydrogen, which can cause significant damage. For instance, tank explosions, especially in enclosed spaces, such as parking lots and road tunnels. Imagine there are more hydrogen cars and all of them explodes. That will create a chain reaction. The cars near that explosion will explode too, and that will be bad, especially if there are people around. And I'm not sure if the adoption of hydrogen will be quite high in the future, even though technology keeps improving. So you have to follow the results, see how this technology will develop over time. Now let's see the valuation, based on the analyst estimates, their earnings. First, the risk. If Plug Power delivers the expected results, these earnings, then the fair value may be around 6.3 billion. And now the market cap is around 4.4 billion. So even though their growth rate slows, The market cap seems cheap at the current level, based on the analysts' estimates, their earnings. Or if you want the fair value per share, that will be around $10. Now the upside, the great scenario, if the growth rate is higher in the future, then the fair value will be around 12 billion, 12.6 billion, or $21 per share. So the current level, the stock price is quite cheap, undervalued. In the normal case, where they'll continue to grow, the fair value may be around 8.4 billion, based on the analyst estimates, their earnings. And now the market cap is around 4.4 billion. So again, based on this scenario and the analyst estimates, the stock price seems cheap, way undervalued. If you can trust the analyst estimates that this company, Plug Power, will make over 600 million earnings in 2027, then at the current level, the stock price is quite cheap, undervalued. But maybe you know that analysts are changing their estimates every month, sometimes every week. So maybe after 3 months, these profits will be lower. That's why you can't trust the analyst estimates. You can only have an overview of what the market expects. Plug Power is not a great investment for me, even though the stock price seems cheap based on the analyst estimates. I don't like this business because of this huge illusion. The number of shares has more than doubled in the last 3 years. And another risk, as I said, is the hydrogen itself, which can cause explosions. And I'm not sure if the adoption of hydrogen will be high in the future. So this is a risk. So it's up to you, if you want to take the risk. As I said, if they make over 600 million in 2027, the stock price is quite cheap at the current level. But if they don't, then your result may be another decline of 80%. That's why it's better to know the risk first. And if you have any questions, please let me know in the comments.